Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining us is Sandy Cockrell. He's the CFO Program Global Leader with Deloitte. We're going to learn more about the Deloitte CFO Signals Survey and how they are adapting operations for near-term performance and evolving their businesses as we get to the other side of COVID-19. Sandy, it's great to have you. Welcome to Trade Talks.
Thank you. Thank you very much.
All right, and let's learn more about the survey. Why are CFOs so in tune to the CFO signals?
So, Jill, we've been performing this survey for 10 years now. It comes out every quarter. This is the 41st quarter that we've reported on. It's comprised generally of about 150 to 175 CFOs of large multinational companies. And one of the things they value is to really reflect on and observe basically the observations of their peers. And that's one of the things we always try to capture in terms of economic perceptions, growth metrics, business focus over the next quarter and over the next year.
Let's talk about some of those economic perceptions. How are CFOs looking, at the world these days with, unprecedented economies that we're trying to navigate through?
Right. Well, this survey was conducted from May the 4th through May the 8th. We had 156 CFOs who were surveyed. As you can imagine, in terms of the North American, European, and Chinese economies, it was pretty dismal in terms of the way they viewed those. Only 1% of the surveyed CFOs said that North America was good at that point, 1% for Europe, and 9% for China. But when we ask about where do they expect those economies to be a year from now, that was much more positive. So 58%, almost 6 in 10, expect the North American economy to rebound, about a third for Europe, and a little over 50% for China.
Well, it's one thing for governments to reopen their economies. It's another thing for consumers to fill that demand. How optimistic are CFOs when they look into the future?
So we had a couple different data points and the ways to think about that. First of all, when we ask for forecasted metrics around revenue, earnings, CapEx, hiring, and dividends, for the first time in the history of this survey, all of those forecasted metrics were negative. Revenue expected to be down over 8%, earnings down almost 19%, CapEx down over 12%, hiring growth down about 6%, and dividends shrinking by 4.8%. So that was really pretty negative in terms of what we've seen in the past. And again, that's for the next 12 months predicted amounts. When we ask about company optimism, which we ask every quarter, 2/3 of the CFOs said that they were less optimistic about their company's prospects over the next year than they were just a quarter. But then when we ask about where do they stand today and what are they doing, we've been thinking about this in terms of respond, recover, and thrive. And only about 24% of the CFOs were still in the respond stage, really kind of in the survival mode. So well over almost 3/4 had moved on to recovering, looking for opportunities, maximize operations, and thrive, where they're really beginning to realign their businesses, their strategic objectives, how they go to market, how they're measured, and candidly looking at new markets, new products to go in after COVID's over.
Yeah, and Sandy, the largest topic of conversation clearly has been what the remote work environment is going to look like as we move beyond, and what it will look like when we go back to work. I think people have this misperception that it's going to be just like it was when we started to work from home back in February and March, but I think the office is going to look quite different. What are CFOs saying about working from home and getting their people back into the office?
Yes, I very much agree. I think what we've seen at our clients and talking to CFOs, we're going to have an entirely new kind of work environment as we move forward. 3/4 of the CFOs in this survey basically said that they expect much more remote workforce in the future. And about 70% said that they would allow employees to work remotely if they wanted to. Those are significant numbers. 3/4 also said that if employees do come back, that they feel like they can manage the physical and the risks of bringing back people into workspaces, which obviously requires office redesign, movement around. When you think about some of the logistics of just getting people into elevators and the queues that will be kept up by that, there's some daunting tasks. Another interesting kind of data point was just less than half said that they would basically bring their people back once they're allowed to under various government restrictions. So that's less than half. A little more than half said that they would not be bringing people back. And one of the gating issues will be until there's effective testing that can be done on site.
All right, Sandy, thanks so much for joining us.
Thank you. Thank you for having me.
All right, you got it. And thanks for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.